Dear investors, numbers always say something, but not every number tells the truth. Sometimes it is within the gaps left behind by numbers rushing past us that the deeper truth is revealed. The company we're going to talk about today, Nice Lilted, is not a traditional tech company. It has built a unified platform strategy across three completely different industrial structures, and that very fact sets it apart from conventional tech firms. However, this multi-layered structure sometimes hides important signals. Let us begin tracking those signals now. On August 14th, 2025, NICE released its quarterly earnings just before market open. Total revenue stood at approximately $720 million, up about 9% year over year. Cloud-based revenue also grew by around 12%. These figures are widely considered reasonable growth rates, but one single line, one single figure brought all other analysis to a halt. Annual recurring revenue, ARR, related to artificial intelligence and self-service, jumped by a staggering 42% compared to the same period the previous year. Ordinarily, for recurring revenue to surge like this, there should be a clear trigger. It could be a large new customer, a major upsell from existing clients, or a significant price increase. But none of these explanations appeared in the released materials. For investors, this absence of explanation becomes an extremely important signal. An unaccounted acceleration in revenue compels us to question the structure itself before considering strategy or technology. And this is where the first mystery arises. What exactly enabled NICE to deliver such explosive growth in recurring revenue? And why didn't they offer a clear explanation? The mystery deepens with the next development. On September 8th, 2025, NICE officially announced during trading hours that it had completed the acquisition of Cognigy, a Germany-based conversational AI technology company. NICE declared plans to integrate Cognigy's technology into its network of over 25,000 distribution channels, clearly signaling a strategy of expanding both technology capabilities and commercial reach. But here lies the issue of timing. Typically, the impact of an acquisition is reflected in earnings from the quarter following integration, once customer implementation begins. However, in this case, the earnings already included a 42% ARR surge before the acquisition was announced. This is where the second mystery emerges. Was the ARR growth entirely unrelated to Cognigy, or had internal integration been quietly progressing already? The first hypothesis is that NICE had already strengthened its recurring revenue structure through internal capabilities, without any contribution from Cognigy. If this is true, the results are indeed extraordinary and could indicate robust structural competitiveness. However, without adequate explanation, even such a result can become a source of investor unease. The second hypothesis is that the effects of Cognigy had been unofficially reflected in earnings, or at least partially implemented internally before the formal announcement. But this brings up concerns about accounting consistency and transparency in disclosure, both of which are extremely sensitive matters. Amid this uncertainty, NICE receives strong validation from an external source. On September 11th, 2025, research firm Gartner named NICE a leader for the 11th consecutive year in the contact center as a service (CAS) category. Furthermore, NICE received the highest possible scores for both execution and vision, an extremely rare outcome. In the industry, this kind of evaluation is seen as simultaneous validation of technological maturity and commercial viability. Generally, such trust from external institutions serves as a powerful upward driver of intrinsic corporate value. Yet, despite this, the third mystery remains. With proven technology, external validation, and revenue growth all in place, why has the market hesitated to fully endorse NICE's valuation? For investors, the key question becomes this: what exactly are we looking at right now? Is it sustained revenue growth or merely a coincidence of timing? NICE is currently trying to integrate three entirely different domains: customer experience automation, financial compliance, and public safety, under a unified platform structure. Its product Evidence Central manages around 37 million criminal cases and over 240 million digital evidence files. Actimize analyzes suspicious financial transactions for hundreds of institutions worldwide in real time. CXO and Empower enhances customer experience by automating interactions and reducing repeat contact rates. Until now, these three platforms have operated independently. But with Cognigy's conversational AI now being integrated, the architecture is rapidly converging into a single organic data graph. This convergence may very well be the real cause behind the recent ARR surge. However, nobody yet knows whether this structure represents sustainable growth or just a one-time spike. That uncertainty is quietly reflected in the market's hesitation and ultimately in the stock price. Now it's time to draw a conclusion. Dear investors, NICE stands at a very rare crossroads. Unlike typical tech companies, it is building a platform in a completely different way, and that structure is not yet fully visible. The spike in recurring revenue has happened, but the mechanism behind it remains unclear. As such, we cannot evaluate this company solely based on earnings figures or third-party reviews. We must examine the logical consistency, scalability, and reproducibility of the structure driving those numbers. The growth NICE is showing is real, but the process by which that growth is being generated still requires verification. In the upcoming quarters, monitoring whether the surge in ARR continues and under what conditions it does will be the key to solving this mystery. Listeners, ValueStir is always eager to hear about the stocks and crypto assets that interest you, whether listed, unlisted, or pre-IPO. Please leave your ideas in the comments. Your suggestion could become the beginning of our next investigation. This was ValueStir.